Hello, everybody. It's Mark Johnson with Guaranteed Rate, and just really happy to see interest rates come down a little bit more this week. It's good to see that inflation, the CPI number came out today a little bit lower. We're going to go through some of these slides and give you kind of an idea of what is happening in the mortgage market. One of the things that I love to do is to just dissect some of the news that's come out and share that with you so that you can share it with your borrowers and your sellers. I hope that these videos will give you an idea, and I've got an email version of it too if you want to sign up for that. I hope this will help you explain what's going on in the mortgage market as far as rates, what's going on with the economy, and with housing in general, and how it all intertwines together. So let's get started here today. First of all, let's look at what's happening right now. Today, rates came down from 6.47 to 6.33. Now, even though this is the national average that Freddie Mac is publishing, most of the rates that you're seeing have a little bit of discount points. And so we're seeing a lot of loans at below 6% even right now with a discount point or so. So that's good news. You'll see this graph is really helpful. This is published by Freddie Mac, and so you're welcome to go ahead and share this and any of the slides that I share with you today. And quite honestly, I see in the future some really cool things happening. First of all, as we see that interest rates are starting to ease now, I expect that interest rates by April will be somewhere in the middle fours. By the way, did you realize that interest rates have already gone down like significantly? Like they're down 1.5% right now. And people don't even realize that, or excuse me, 1.25% from what they started out with back in I guess it was in October when I hit the high of like 7.375 there. Small. Sorry, it's pretty small to read. But what I'm saying here is that we don't even realize how far rates have come down. And so as I'm telling you, my prediction here, people are saying, well, that's a lot for it to come down. Well, it's already come down 1.25, and that's with inflation still on the rise. Now that we see inflation starting to come down, and I still see that on February 14th, the Federal Reserve will probably raise it another 0.25%, but that will be good for interest rates. And that'll be good for our borrowers because a lot of borrowers are just waiting to get in because they can't qualify right at the 6.5 or 6.25 or 5.875. They need rates to come down a little bit more. The other thing that I feel very strongly about, and this is just an internal thing, a gut feeling that I have, is that right now you're seeing a little bit of inventory, and you're seeing sellers offering concessions to buyers, and those concessions can be anywhere from $10,000 to $15,000. I got a contract in the other day, and it had a seller concession of $10,000, which was more than enough to cover all the closing costs, which is great because this person is going to refinance their house down the road. And that means they're not paying closing costs twice, right? So anyway, I believe that this market's going to stay the same way for about 60, maybe 75 days. After that, you're going to see interest rates come down again quite a bit. And then you're going to see that the buyer's market that we're in right now is going to switch over to a seller's market. And you're going to have sellers being able to command higher prices. You're going to have a feeding frenzy of buyers out there who are going to be looking for homes. And you're going to be back in the year of 2002 where you're fighting against multiple offers. You're offering above appraised value. You're waiving appraisals, all kinds of crazy things. That's probably going to happen when interest rates get down to 4.5, because let's face it, a lot of our buyers and our sellers are holding off to get into buying another home because interest rates are so high. So as you've probably heard so many times, I hate this cliche, so I won't even say it. But anyway, I feel like right now, if you're a buyer and you can get the house that you want, you're going to be happy today that you do that versus waiting until interest rates come down, because you can get the seller to pay your closing costs now, and then you won't have to pay closing costs twice. And if you wait, home prices are still going up here in the Salt Lake Valley. So you still want to get in right now, I think, And so advise your buyers to do that. The other thing that I wanted to do is just also let you know kind of what I'm seeing that um, as far as the consumer price index one last time is that it came down from 7.1% to 6.5%. Now, the Federal Reserve has a main focus on the core rate of inflation, which strips out food and energy prices, and that increased by about 0.3%, while year over year, the index decreased from 6% to 5.7. Overall, we're seeing that inflation is easing, and which is really good for interest rates. And as I said, interest rates from the high of October have come down 1.25%. So right now, maybe is a good time to reach out to your pre-approved borrowers or people that were thinking about buying or selling, and let them know, hey, rates have already come down 1.25%. It still looks like they're going to come down a little bit more, probably another 1.25% to 1%, and or 1.5%, somewhere through there, and see if maybe you can jolt some of these people off the fence to buy now and then refinance later. All right. Hope that helps. Have a great week. We'll talk to you next week.